Hi, and welcome to the Property Legacy Podcast. This is our third episode, and today you're joined by me, Steve Potter, and Alice Potter, my daughter.
Hi everyone. So today we're talking about funding your investment and exactly how we do that, because money is the big factor that comes into property investment, and you don't always have to use your own. A lot of people don't realise that there are lots of people with money out there that want to invest their money into different ventures and different things. So we're going to delve into that. So in terms of funding the investment, how does it work with managing cash flow? Because that is something that people will tend to worry about, not have much information around, and especially if you're starting out, you've never done this before, it is something that is essential to know your stuff about.
Yeah, obviously, if you're buying a property to rent out, most people will buy a property that needs doing up, need to decorate it, you need to get all the certifications in place. So there is going to be an amount of time where you'll be paying the mortgage but not got a tenant in situ. So you need to make sure that you have enough money to cover those bills, the council tax, all the gas and electric, while you get the property done up. It can be done quite quickly if it's just quick decoration, painting, that type of thing. But if it's more serious work, then it could be 6-12 months of work. So you've got to bear this in mind and factor all of this into your calculations. Now, once you've got the deal set up and you've got the property and you've got somebody in situ, then it's a good idea that when the rent comes in, instead of just spending it all or using it for your own income, it's a good idea to put a small percentage, say 10% away each month for a void. So a void is when there's a gap between one tenant leaving and another tenant coming in. So if you start putting money away for that, then you will have a cash lump sum that you can use to get you across that gap. Also maintenance. So if you put some money away each month towards maintenance, and then if something happens like the boiler breaks down, it's not going to have a big impact to your cash flow. And all these little things will help and manage your business as you go forwards. Because a lot of people don't realize that investing in property is a business, it's a company. You need to set it up and run it as a business. And that way you can put money to one side. Obviously, you're going to get taxed on some of your money, so you need to make sure you've got that money in place.
Yeah, and it's definitely essential criteria, especially when you're dealing with lots of money. And I think sometimes people can get carried away, especially with the whole decoration aspects of things. You want things to look nice, you want things to look beautiful, but if you're running out of all your cash and you don't actually get a tenant in for a couple of months, then you're a little bit stuck then. You might have a beautiful house, but if nobody's living in it, then it's not really ideal.
Or if you're trying to get that much money for it, like £1,500, £1,600 for a 3-bed house, if you're trying to get too much, then nobody will rent it.
No.
And it'll just be on the market. It'll look great, but nobody will rent it. So you need to get that happy medium of something that people will rent, that people can afford, and done to a good standard and good quality, so that people are safe and secure in their home.
And in terms of obviously buy-to-lets, I know that you need to have a specific mortgage for a buy-to-let, so you can't just get a normal mortgage.
Yeah. So if you're renting a property out, you can then get a buy-to-let mortgage, which generally means that you're only getting charged for the interest on the mortgage rather than repaying the mortgage. So if you get a personal mortgage, you tend to pay the interest and an amount towards repaying the mortgage off, so you pay it off over 25 years. A buy-to-let mortgage, you never actually pay off, but you just pay the interest on that mortgage, and that then means out of the rent that's coming in, you'll have usually above 2/3 of the rent as your money. What that means in time is the value of property will increase, but the mortgage will stay the same, and after 20 years you'll have to get another mortgage to remortgage, but by that time the property will have doubled in value, so you don't have to get such a big mortgage again. So buying a buy-to-let house, you need a buy-to-let mortgage, which means you have to be careful with this. You can't yourself live in it. You can't have any of your family, any children or parents live in the property either. And you have to have a proper short hold tenancy for a 6-monthly term that keeps repeating. The reason for that is if the property was going to be repossessed by the bank, they need to know that they can actually move people out of the property every 6 months. They have that opportunity to. It just means they can move people along if they need to sell it, but quite often they sell it with the tenants in because investors still want tenants in the property. So from a buy-to-let point of view, you get a buy-to-let mortgage. You can buy buy-to-let mortgages in your own name or in a company name. I would always suggest that we always buy property in a proper limited company so that you get the best benefits of taxable savings, and the way that the companies work, you can make more money with it that way. If it's in your own name, then you will get taxed as though it's your wage.
Okay.
So you will get taxed higher.
And the big question in terms of financing the investment is, what are alternative finance options? Not everybody has the capital to just go, I'm going to buy a house, but there are alternatives, and there are people out there that are willing to make up some part of an investment. So let's discuss that.
In any deal, you need to see where you're going to get the money from. So yeah, if you've got the money to buy the property outright in your own name, then fine, do that. But it's better to leverage your money. And the way you do that is by using other people's money. So if it's a mortgage, that's somebody else's money. If it's a personal loan from a relative, that's the same as getting an investor. Or if you actually start talking to property investors that just want to loan the money to the deal, and they will then get the first charge on the property like a mortgage would have. So they've got security. If anything goes wrong, they own the property. So there are people out there that look for properties to buy, but they don't have the time. So they're cash rich, but time poor. And what generally means is the managers or owners, company owners, they're people who've got money that they've built up over a long period of time, but they know that if they leave the money in the bank and inflation is higher than the interest rates they're getting, they need to invest their money to get a better return. And they can't just go and buy all the deals, so they look for people that will work with them in a joint venture to then make more money for them.
And we always say that property is one of the safest investments as well, because it's a physical thing. It's not something that's on the internet that's created that could potentially disappear tomorrow.
The thing about real estate is the fact that, especially in the UK, we're living on an island. There's limited amount of space, but each year the population increases. We get people emigrating to the UK, people having children, and the population keeps getting bigger. And there's always going to be a scenario where property is going to be, or land is going to be sought after for years and years and years and years to come. In the UK at the moment, majority of the people own their own houses, but it's starting to get to the point where people are having to rent properties rather than buying. Like the rest of Europe, probably 20% of the population own 80% of the property. In the UK, it's not quite there, but it's getting that way. So it'd be a good idea to be one of that 20% that owns property in the UK.
So another alternative in terms of financing options is equity release. This could be if you already have more than one property, or if you've got a family member, a parent who wants to release some equity on the mortgage that they've been paying. So let's explore the options of equity release and how that could potentially be a financial investment. How does equity release actually work?
So if you own a property and you don't have a mortgage on it, then you own it outright. But what that means is if it's worth 200,000, then the equity in that property is £200,000. But it's in your property, unless you're going to sell it, you can't get your hands on that money. So equity release means you can get a mortgage for 50% and they'll give you £100,000 because your house is worth 200,000. And then you can use that money for renovating your property, or for buying another property, or for giving it to your children, or lots of things you can do with it. But in property investing, you can release the equity that's in your property and then use that as a deposit to go and buy another property and rent that out. So if somebody had a £200,000 house and then got a 50% mortgage on that, they could then get £100,000 and then split that up again and then again and again to get as many properties as they wanted and have an income off that. So equity release is a good thing to do, to release the cash that's built up within over time and then use it to buy more properties. We did that at our house that we live in. It was worth 105 when we bought it, and then a year later it's worth 130. So we remortgaged and released £17,000 out of the property, and then we went and bought a 2-bedroom property with that money.
So they gave you £17,000?
Yes.
And how long have you been in the house for?
A year.
So you'd not even paid £17,000 of the mortgage?
No, what happened was we bought our property in 2020, just before, the month before COVID. We actually moved in 20 days before lockdown.
God.
So we were quite lucky. But what it meant was there was a huge increase in house prices of 2020 to 2021, which then meant that all house price went from 105,000 to probably 130, 140, and now it's even worth about 180,000. But we didn't do anything. That's the good thing about property. Prices will increase depending on market demand. So this happens on a regular basis. Prices will go up, they do come down a bit. At the moment we're in a bit of a slump, while it's in a bit of a dip due to the economy, but it will start to increase again. On average, property values double every 8.1 years. So eventually we will all have £1 million houses. Still might be the same house we live in today, but eventually you will get there. If you double the value every 8 years, you will get to over £1 million within the next 20 years.
That would be nice, wouldn't it?
Well, it just means that the really expensive ones are about 30 or 40 million, and we still won't be able to afford them, but
Yeah, we can dream.
We'll all be millionaires.
If we're talking serious questions, how do we actually find investors?
Okay, so what people don't realise is people have money and there's investors everywhere. Okay? You just have to know where to look, who to talk to, and how to promote yourself. So social media is really good. You know about social media more than I do. So I have been using LinkedIn for the last 8 years, never really done much with it. And 2 months ago, we started to work on LinkedIn, started to progress, and we set up a group for property investors in the Northwest, and we started inviting people in. And what happened in a very, very short period of time, I went from my measly 150 connections, which is not very good, to over 1,000 connections and thousands of followers. The group's gone from 0 to 500 members. And just doing that meant now that people are coming to me looking for deals. So they're investors that are looking for properties in the region of, some people are looking from 50,000 to £500,000. Other people are looking for £1 million to 5 million, and then there's a lot of people, usually funds in London and abroad, that are looking at properties from 5 million to 100 million. There are people like that every day of the week looking for deals. These are people that haven't got the time to investigate every area within the country, so they're looking for people that have got a good deal, that they could get the money in, make some good return, and get the money out within a time scale that they're happy with. So you've got lots of pension companies that are looking to invest in property because they know that property brings good returns and that the property is double in value every 8 years. So they're all looking for these kind of deals, but they don't have the experience or the time to actually go out and do it. So by promoting yourself on LinkedIn or all the other socials, people then start getting invested in what you're doing. People love, for some reason, watch you paint walls and hang wallpaper, all that kind of stuff they really like. I don't, but it's just what people like. But it then gets people interested in what you're doing, what it's going to look like at the end of it. And then there are people who want to know the ins and outs of the financials, and then people then start asking if they can work with you, if you can help them. And all of this is networking with different people in your environment. But everybody knows people already that will help you and will invest in you. So the first 2 properties that we bought, we had an investor that gave us the money for the deposit. It was a small amount, relatively small, still more than I had at the time. But that's how we bought the first 2 buy-to-lets. We had somebody that was giving us the money, and they own 25% of the property, and that over time will increase and they'll get benefits from that in future. So it doesn't mean you have to have lots of properties, lots of experience. You just need to market yourself properly, talk to people. If you know 50 people in your network or your socials, and they like you, then if they put you in touch with 10 people they know, then that 50 people turns into 500. And immediately then you'll 90% of the time, if by doing this kind of thing, you will generate interest and people would actually help you. Or multiple people could put in £1,000 each until you've got enough for the deposit.
Yeah, it's crazy how much word of mouth really helps as well. Like, I've been and done networking events and met people for a couple of minutes, explained what I do, what my business is, and then I'll receive messages like 2 or 3 weeks later from companies that want to work with me for freelance projects, and they say, "Oh, you've come recommended from this person." I met this person for 5 minutes and clearly had some kind of impression on them. We left that day, we followed each other on social media. We'd not had a discussion since that point, just a few little likings of posts and nothing crazy. But it's all about making yourself memorable, and it's all about who would say your name in a room if you're not there, who would actually suggest you. And it's really powerful actually just how much trust people build up just from a couple of minutes of meeting somebody in person, because we're all business people but we're all people as well, and that's the human part of networking.
Yeah, well, the thing you have to remember, the millionaires and billionaires all started off with nothing at some point, unless their family had lots of money. But Richard Branson started off with next to nothing. The guy who developed Amazon started off in a very, very small office selling books. And now look at what Amazon do today. So you just don't know what people have gone through in their past to get to where they are. Normally it takes years. People say it's an overnight success, but it took 10 years of failing before becoming an overnight success quite often. But people that have already succeeded then like to invest in people that are coming up through the system, and they want to help people and mentor people so that other people can do what they have done. So it's all about sharing that information and passing it on to the next generation. Because if you don't, then this entrepreneurial spirit that we have will just die out.
Yeah.
And people have to help each other. So people will get helped out when they come up the ladder and build their businesses. So they've passed that on and passed that on. And it's a good way of giving to other people to help them.
Finding property investors is actually easier than people make out. It's just knowing what language to use and where to actually find them. And one of the things that we offer here at Property Legacy is our property investment coaching. We currently work with a team of students that we coach on a monthly basis, and we are looking to expand our team. So if you are looking to get into property investment and you are looking for some guidance and some coaching, then we are offering it, and we will be sharing more information on our social media about that. Just making it clear, Steve is the person that coaches you, not me. But we are looking into potentially teaming up and doing a little bit of property investment and social media coaching, because they do kind of go hand in hand.
They do.
Social media is beneficial to helping you find property investors, so it's putting the right stuff out there and making sure that you are creating content that's going to hit the target audience that it's intended for. So watch this space with that one.
If you want to get in touch with us, you can go to our Linktree and get an appointment with us where you can talk to me. If you want to talk to Alice, you can talk to Alice as well.
I mean, there's really not much we could talk about. And that is everything for our 3rd episode. Thank you so much for listening. We hope you're going away and doing some research.
If you're watching us on YouTube, please like and subscribe. Select the bell so that you get all our episodes notified to you. Spotify, if you're on there, give us a 5-star review. That'd be really helpful to get our podcast out to as many people as possible. And you can follow us on Facebook, Instagram, TikTok, and LinkedIn. We're all on all these
We're covering all bases.
Yeah.
Thank you so much for listening, guys, and we will catch you in the next episode.
See ya.
Bye.